Hey, Brittany, it's so good to see you.
Hey, Rene, I'm so happy that we're joining each other again on the podcast today.
Yeah, who's our guest today?
Today, we have a really awesome guest. It is someone you know very closely, Rae Nomura. She's an investment broker over at SBN Embry Realty. She's fantastic at working with 1031 exchange buyers and private investors, especially those looking for income producing properties. What I really like about Rae is her valuation first approach. She doesn't look just for deals, but she also digs into the numbers, uncovers lease issues, reimbursement options, missed expenses, you name it. She's strategic, detail oriented, and really good at helping clients not just find a property, but find the right property for them that actually pencils out.
Yeah, her MAI background and her current CCIM expertise makes her a force to be reckoned with for sure.
Oh man, I can't wait to get into this episode and talk about you guys' experience together and everything that she knows about the commercial real estate world industry.
Yeah, let's do it.
Thank you for being on, Rae. Why don't you start off by just telling us a little bit about yourself?
Sure. Hi. Thank you for having me. Rae Nomura. I was a commercial real estate appraiser for 9 years. Loved it. Got bored and burnt out, especially through COVID. Appraisal is a great foundation, but it is a grind. And I love people and I love working with people and not just on Excel spreadsheets behind a computer. So I made the jump over to brokerage almost 3.5 years ago. We're pushing towards 4 now. And love it. Sleep better at night, have a lot more fun. It's been a great journey. I focus on investment sales. Retail is my love and passion, but happy to help people through mixed use, multifamily, some single tenant office that I would say operates like retail. Love working with exchange buyers, getting to use my appraisal background and brain and help them understand how those properties work and what opportunities are there and take advantage of mismarketed opportunities in the market.
When you were an appraiser, did you specialize in a niche as an appraiser?
Yeah, I started off in retail and ended up learning how to do multifamily and then really got into mixed use, which takes a special kind of underwriting. I think if you're going to do it correctly, right? A lot of people with mixed use will just throw a cap rate onto whatever other that component is. So here's our multifamily, we'll just throw the cap rate onto retail, or we're looking at it as a retail investment, we'll just throw that cap rate onto multifamily. And I really think they should be separated and analyzed as two individual components and then put back together as one piece. And so I really enjoyed doing that on the appraisal side. Also, all of Portland is zoned for mixed use for the most part. So I think we'll get back there in the next 10 years. It's something that was heavily developed in the last 10 years. Development has slowed down and we're beginning to see that investment again. That it's kind of a unique asset type that I think a lot of people can get comfortable with as well. So I love taking an investor who thinks they want multifamily and trying to convert them to being a retail investor. That's one of my favorite missions in life, mostly because I love retail. But it's something that so many people get into investment, as you know, Rene, and they start with multifamily, right? They start with a duplex and that goes into a fourplex, into a 16plex. And all of a sudden they have a portfolio of multifamily and they're in their 70s and they want to retire. And the rules have changed completely in the last decade for them. And they're trying to figure out, well, where do I go next? I don't want this headache of what has become multifamily. And I love to try to get them into retail and think that there's some great retail options out there. But one stepping stone can also be mixed use, which helps bridge that gap of, I love multifamily because everybody needs a home. And so I feel safe and secure investing in multifamily, but expenses are uncontrollable. Insurance is through the roof, taxes, the limits on what we can do for rents. And so if you add a layer of retail where 40% of that is being reimbursed through triple nets, all of a sudden you have adjusted that portfolio and that asset type to have a little bit more control. And I think is something that can be very advantageous for an investor moving into the next stage of their life.
Yeah, I would totally agree with that. That makes sense.
Yeah. That's really cool. I feel like we haven't had anyone on yet that talked about mixed use property, and I don't know why it never occurred to me because I'm in Portland too. And I know that most of it is like retail on the bottom, multifamily on top. And so with that in mind, like what's on the top of mind for you? What kind of investment activity or buyer strategies are you seeing in the market today?
I think people are looking for safe and secure. There's so many unknowns in the last several years from a political standpoint, both nationally and locally, and how that's impacting. And we also have so many boomers that, right, or that have been investors that are transitioning from, I don't know what's going on. I feel very overwhelmed by the current environment and I want some sort of security. So helping them find something that feels a little bit more stable and secure is definitely the driving force, I think, from a lot of investors. And that doesn't have to just be the leasehold situation or the location. It's really a combination of those factors and what they're looking for.
Well, I know one thing that's critical for you is I really view you as a matchmaker. You have the tendency to really go deep in your consulting with your clients to find out not only what their needs are. They doing a 1031 exchange or do they just have cash to invest? But then you go through a pretty thoughtful process on, okay, well, what am I going to put them into to help them achieve their goals? What does that look like? So talk to us about kind of what goes through your mind when you're doing that matchmaking process.
Yeah, I love matchmaking, both with humans and with properties. I've successfully linked 3 married couples that all have their children and are happy. My husband's always like, stop meddling. I'm like, I don't know. I think I got this handle.
You're doing something right.
Yeah, it's fun. I like to think about that. And I also love thinking about that on the investment side. I start with a very wide swath when I begin working with somebody. I love hearing what they think they want and then asking them why they think they want that. So with multifamily, it's always like, oh, I want something that's easy and known and the management isn't that much. I'm like, wait, multifamily? What, are we talking about the same investment type here? So, and we've never really thought through retail. They just think like retail, oh, they're going to go bankrupt and it's going to be a big box and it'll be scary. Like, well, it could be the hair salon that you need to go to every 6 weeks, the liquor store that is only located in Oregon on that very specific block. There's a lot of safe retail tenants too. So let's really unwind what it is that you think that you want and start looking at everything. I love to send them a little bit too much information and ask for any and all feedback. And that could be, I don't know why I like this. I just don't like it. I don't like flat roofs. I hate Chipotle. I'm never buying anything with a fireplace. I've heard that one, right? Everybody has their own idiosyncrasies. So really being able to fine tune that and understand what it is that I think they're trying to look for. And then just keep an eye out. I search everything that comes up new every day, try to pay attention and see if I know a buyer. I keep a list. I have a CRM that I should utilize more than I do. But I also have my little list of current buyers that I know are looking. And every day I'm looking and seeing, is there a property that might fit their wheelhouse? And if so, let's talk about it. Let's explore. Or if not, let's understand why that doesn't fit so that we can fine tune what fits even better. And looking for the mismarketed properties. I love finding kind of that mismarketed property or, where maybe the broker doesn't really understand the opportunity or they just weren't given the information of lease renewals or something that's happening in that market. We see it all the time. You see a broker that has sort of helicoptered into an area that they don't do a lot in, and they aren't aware of other factors that are influencing that market. And there's a great opportunity there. I love trying to pay attention to those and taking advantage of that situation.
Hey, I'm going to segue here for a minute. Isaac Grant, who's a CCIM in our chapter and has been on the episodes in the past on the podcast. I just had coffee with him and he related a deal that he just closed almost identical to that. A broker had a property listed for sale. Isaac and I looked at it with some buyers and we just couldn't come to terms with the seller. So our client, we found them something else. They were doing a 1031 exchange. We closed. But Isaac remembered that property that we had looked at, I don't know, gosh, it was probably 6 months ago now. And he happened to run into that broker at our CCIM lunch recently. And he asked that broker, he said, how did you come to your pricing? And the broker said, well, this was recently built. I think it was like 18 months ago, and there was an appraisal done. And so Isaac was able to basically walk that broker through the pricing and said, oh, okay, I know what the problem is. Your seller has this price in mind, but think about it. Interest rates were cheaper then, and rents were supposed to come out higher. And now we're in inflation. There was just a bunch of factors. So Isaac talked to the broker about it. They basically put together a new pro forma. Isaac brought in a buyer and closed on the deal. And it was like a $2.5 million deal. So I think you're spot on about missed opportunities and deals where brokers sometimes think they're close to a number, but then often will get pressure from a seller where a seller says, oh, you're close, but I want this number. And so they'll add another 300,000 onto the price thinking, well, we're going to have to negotiate anyway, but it just blows out the cap rate. And I've talked to a couple of brokers with mixed use and said, how'd you come up with that price and that cap rate? And they're like, well, I didn't really have any good comps. So that's what the seller wanted. So that's what we closed at. It was just a little mind-boggling that people actually buy and sell real estate on that and not really by the numbers. So I just thought it was super interesting that Isaac had that real situation that you're talking about, where you just have to ask questions and ferret out, how did somebody come to their list price or their price that they're asking for?
I love that story you just told, Rene. And I think that's really going to relate back to the audience and really speak to like what you do, Rae. And I think switching gears, one thing we want to talk a little bit about is what kind of assets are your 1031 buyers looking at today? Like any specific stories you have?
Depends on the buyer, right? The buyer profile, safe, secure. They feel like there's a little bit of room to grow. I just closed one. It was an exchange buyer who is relocating from Montana, wanted to move their assets to the state of Oregon as well. And it was 5 retail condos in downtown Milwaukie, Oregon. That was a really interesting and fun one to work on. Frustratingly fun. So I love retail condos for a specific buyer, right? Retail condo is something that should always be considered. And this goes back to my kind of appraisal brain, is you're never going to have the rights to redevelop that site. And so there is some sort of price discrepancy between retail condos and a retail strip center. And the influence on the cap rate, influence on the overall development potential, and the overall ability to purchase that investment. But for them, it worked out great because they're retired. They wanted something that was low management. They're not trying to redevelop something. They just want it to cash flow and be easy and clean. And the other big benefit of a retail condo is that you're not dealing with the maintenance. It's part of an HOA. You're not responsible really for the roof. You're not responsible for anything. And your tenants pay everything because it's retail, so it's triple net. So it's pass through, including the reserves most of the time on a retail condo. But that one was really interesting because it was 2 HOAs and 2 buildings. So 2 of the condos were in one building, one HOA, and 3 of the condos were in the adjacent building under a separate HOA, which we did not realize when we got under contract. So trying to figure out, and some overlap of ownership, but not necessarily all the same ownership that was selling them. So 3 insurance policies, 1 for each HOA, 1 for the overarching landlord policy, discrepancies in the leases and the accounting, 1 HOA that had a reserve account, 1 that didn't. What does that look like? What is each HOA responsible for? And then how is management reconciling all of that? So it was a really interesting one to work on. But
I hear deal of the year for the CCIM chapter coming. So who were the individual tenants? If you can share either maybe their use or who were the tenants in each of those retail condos?
Yeah, so one was a new tenant, which was a whole nother caveat of trying to figure out when they actually were beginning to get rent and paying rent and who that should be reflected upon. It was a therapist, a massage use was the second one in that same building. So they worked really well together, but I would say higher risk profile if you were trying to pull that one apart. And then the other building was 3 restaurant style tenants, which
Wow.
People will bark up and down all day long about restaurant and how they hate restaurants, but restaurant spaces are built out for restaurants. They're really expensive to build out. They have high STC charges. And so once that is established in there, people are always going to eat, just like people need a place to live. We're not going to stop going out to restaurants. Their fads are changing, but I think a good, well-positioned restaurant is a great tenant to have. And in this case, 2 of them were original to construction in 2007 or shortly thereafter. The third had been there for, I think, close to a decade, and everybody had 5+ years on their lease remaining. So it felt secure with 3% escalations, right? And tenants reimbursing everything. And so it was very simple and easy for my buyer to wrap his head around once we pulled apart all the other strings and simplified it, that this is going to be a great, solid little investment that hopefully they don't have to do too much with for several years to come.
So obviously your appraisal background really helped you in that underwriting process, because you're talking about like CapEx and reviewing the leases, looking at expenses, seeing what's covered. So I'm assuming that I bet your little analytical brain was just happy as can be from your putting your appraiser hat on every day when you're working on that deal.
And you're right, Rene. I love to negotiate that way. I want everybody to be happy at the end of the deal and want to feel like we've all had fun and gotten our jabs in, so to say. But my favorite way to negotiate is to really peel back the onion and understand the finances of what's happening inside of a deal and see if there's something that has gone wrong or is mismarketed or is falling short that my buyers should really be compensated on. So is that a loss in rent or a loss in CapEx that we thought was going to happen? Particularly in retail, sometimes you'll see that management can't be reimbursed, and maybe they said that it was reimbursed, or the reserves were not being reimbursed, but they could be and should be. So that was just something that we'll just set up going forward. That was a very easy adjustment because it will mean minimal adjustment to the tenants moving forward in reality, but a big adjustment to my buyer. But yeah, getting in and fine tuning all those little idiosyncrasies, I love. I love reading and skimming through leases and looking for those opportunities, as well as how you can reposition that property and make your buyer more money. There's often money that's being left on the table that just gets skipped over when somebody is taking a back seat to their own investment, or maybe it's being not managed professionally. And until somebody really digs in, you don't know.
Yeah, it sounds like you have to do a lot of untangling of the web, or like I just see that big like jewelry box where like all the necklaces are intertwined and you've got to untangle it. I feel like that's so satisfying once you finally get through that web and peel apart the deal. And so what's like your favorite time that you've ever gone through a deal and you got to the end of it and untangled it and it just was the best time ever? Like you had a great time doing it and it came out really good at the end.
I mean, any deal that we close, right?
Good answer.
All of them.
I've only been in brokerage for 3.5 years, and it has not been the easiest 3.5 years. And so I would say that every deal feels very complicated by the time we get to the end. And I am thrilled to get to the end if it's successful. So there is one that comes to mind. I'll hear what I can disclose. So this was very creative. We had to work through it. An exchange buyer on a retail center about a year ago that we loved. Also, we got far enough in our exchange that we were in that identified period. This was the property that we were going with, right? And to be quite frank, we had no backups. She didn't like anything else. She was a pretty picky buyer, and she liked this property and she wanted this property. But when we started peeling back that onion, there was so much going on. 7 sellers. One of the sellers was part of the tenant operations that was staying behind. But this was a scenario where rents were supposed to go up per their lease, but then COVID happened and they were like, it's fine. No need to increase your rents. No need to put this in writing. No need to re-clarify that this is not what's actually occurring. So the NOI was drastically off from where it was supposed to be and what it was. And then the sellers got irritated and They weren't necessarily wanting to pay part of the rent that was due either. They didn't want to have any of those negotiations with the tenants and say, hey, we know that you've been on this COVID rent that's been reduced for the last 4 years, but COVID's over. You need to start paying your legal contract binding rent. So in the end, we had a estoppel signed by every single tenant, clarifying exactly the documents that they signed that were lease binding documents. And then we went back after the close, the new management, and clarified what those rents really are and what those rents are to be paid. And we were able to get back up to the NOI that we thought we should be getting and the operating level that we really needed to be at in order to purchase that property. It got really scary there for a little while because, it was like trying to negotiate with the sellers. Okay, well, this lack of NOI reflects what should be a price reduction on the same cap of $300,000, but the sellers don't want to reduce their price to $300,000. They also don't want to have that conversation with the tenants to bring those rents up where they should be. And so doing a little bit of song and dance, but I think over a 6-month period post-close, my sellers were able to get things to where they really should be and gently walk through the tenants with that conversation as well.
Will you explain to the audience also what an estoppel is?
It basically just outlines everything in the lease, or as much as in this case, you want the estoppel to outline. So we didn't want to say what the current rent was or what the current reimbursements were or what increases were. We just wanted to say what legal binding documents the tenants had agreed to and the dates and make sure that there was no other outstanding documents. So that one was more creative, where a lot of times you do want to clarify, here's the base rent, here's exactly what the tenant's paying in triple nets and what they're reimbursing. Their next increase is June 1st with a 3% increase. They have 2 5-year options to renew. So that it's just laid out and set in stone that everybody is aware of the terms and the lease documents. Last thing you want to do is close and have a tenant come back and say, oh, but I have this amendment that says that I don't have to pay rent for the next 3 years. I don't know, maybe the tenant's related to the seller and they wrote something. It seems rare, and a lot of times it just feels like an exercise, but it's very important. And I just heard a story recently of somebody else. They were working with one, they thought it was going to close. A lot of times you don't get estoppels until like 5 days before closing. And the tenant raised the flag. They said, well, actually, I'm due $250,000 for a renovation from a few years ago. And like, what do you mean? Who was paying this $250,000? And it was true. That was outstanding. And it had never really, it got swept under the rug somewhere along the line. And they actually closed the deal. Kudos to that broker. But it took a little bit of massaging and trying to figure out if that was going to come out of the seller's profit or where that money was coming from, because the tenant had the right to it and they were demanding it.
Was that a retail type tenant, not a multifamily, obviously more like a retail tenant where they had done some tenant improvements?
Yeah. And the estoppels are so important in retail because the leases can be so long and that leasehold right. If you have a tenant that's below market and you're thinking, I'm going to buy this property and increase the rent over the next few years, but all of a sudden you look at their option to renew and find out that their option to renew is for 20 years with a below market rent, you're really buying that leasehold and you're losing out on that opportunity to generate that income. And that needs to be reflected in the price and known.
I totally agree. I've got some buyers that are looking at property that they've got 2 nonprofit tenants in there. And we just found out they've got 4 2 to 3 year renewal options. And they're so far below market rent that my clients were like, this doesn't make sense. There's no way. So we backed out of that. And you're right. The estoppels are pivotal in that. It's funny, in a lot of the forms, it's written in as what I call boilerplate that you can ask for tenant estoppels when you're writing your purchase and sale contract. If I receive that and I'm the listing broker and I'm advising the seller and it's a multifamily property, we'll go back in an addendum and say that we will not provide tenant estoppels, that we just have the seller verify or certify the rent roll at the closing table, because multifamily is a little easier because, you've got a pretty straightforward lease, and trying to get estoppels from like 30 to 200 tenants is just a nightmare. I mean, I've done it. It takes pizza gift cards. It takes grocery gift cards. You're sitting in the parking lot waiting for them to come home from work. I mean, it's a nightmare to get tenant estoppels when you've got tenants for multifamily, but the retail, yeah, you're spot on. That's really critical to protect your buyer. Okay, so can we talk about your Walgreens NAPA deal, or is that confidential and private?
Yeah, we're under contract, so I can only tell you so much, but it's, I think, a really fascinating retail investment to look at no matter what, and that's probably the appraiser in me. But this is a Walgreens in Pendleton, Oregon that we brought to market at a 10.6 cap rate, which, I mean, you cannot find a 10 cap, right? Unless it's maybe middle of America. Right. It's not going to appreciate. It's just going to sit there. And that's why you get that high cap rate, because we know that land is not appreciating. And so you're making your money on that annual basis instead. Our cap rates on the West Coast tend to be a little bit more compressed because we see such high values and appreciation in land over a much shorter period of time. And so therefore you're willing to accept a smaller cap rate in the beginning on that cash flow. So Walgreens are built to suit. They've changed their structure. They used to be this 14,000 square foot deal. They would sign a lease that's good for like 20, 25 years with automatic renewal options up to 80 years and increases in each of those options. They've now gone to like a new format that looks almost like a fast food restaurant, 22,000 square feet, drive-through sort of situation. Walgreens is an interesting component anyways, right? Like it's pharmacy. They're shutting down. They're opening up new stores. They're kind of all over the place. I don't know that they're a fearful tenant, but there's a lot going on there. And so this one, Walgreens had subleased the space to NAPA Auto Parts. Fully within their right. They checked with the sellers to make sure they were on board, but say, hey, we have this lease obligation. We're going to lease it to NAPA Auto Parts. You don't need to know what that lease is for because we're still paying you the contract rent that's due. And we're going to be paying that to you for several years. And so on this one, that lease runs for 8 more years. So you know that Walgreens is contractually obligated to pay you that rent for 8 years, but they're not going to actually be occupying that space. So NAPA Auto Parts went in, they've renovated the space. It's bigger than what a typical NAPA Auto Parts is, but because it's in Pendleton, Oregon, they use their like retail portion, and then they also use the back for warehousing and to be able to get stuff to their other locations that are in the area. So kind of cool that they're actually utilizing the entire store. But rent on that building is like 20 something bucks a square foot, absolute net. That's probably higher than retail rent for Pendleton, Oregon, which is probably closer to, say, like a 12 bucks a square foot rent. We don't know what NAPA is paying, and we don't have the right to know what they're paying, and we're not going to find out. So bringing this to market was a unique situation of you have guaranteed lease from Walgreens, like Walgreens or not. They've subleased it to NAPA. You don't know what NAPA is paying, but you're getting a 10.6% return for the next 8 years. And it took a little bit to get, I think, some buyers' heads wrapped around that because they see 10.6, they love it. Like, what is NAPA paying? I don't know. But where else are you going to get a 10.6 cap? So yeah, we're under contract now. Thankfully, we ended up with multiple offers. Good about the situation, I hope. But
that's awesome. I'm so happy for you. Congrats. That's great.
Thanks. And an appraiser way to look at this would be if rent was 12 bucks a square foot, market rent, you would buy that investment all day long at a 7 cap in Pendleton, right? For 8 years. That's a, let's say, pretty appetite sensitive investment. Then you could take the net present value of that leftover income between the 12 and the 22 for the next 8 years and throw that on top to what that 7 cap would be. And you would be right back at our purchase price. A few ways to sort of chop up the investment and make it work.
Yeah, that's awesome.
So cool.
Are you going to close before the end of the year? Is that going to be another contender for deal of the year?
Oh yeah, you betcha.
That's awesome. For those of you in the audience that don't know, Rae and I belong to our CCIM chapter in Oregon, and we all strive to win Deal of the Year, and we're all contenders. And Rae works for a principal broker named Ryan Embry, who's won it many years. And we as women love to cream the guys and clean their clocks. So I'm rooting for you, Rae. I hope you win every award possible this year.
Well, Ryan is on that one with me. So,
Okay.
but we have a few others, as Ryan would tell you. I don't work on anything simple. I love a
That's
good,
awesome.
complicated head scratcher. So,
You love a challenge.
yeah, I've got several contenders I'll be submitting this year.
Right on. That's awesome.
What are some common mindsets or mistakes that you see 1031 buyers making? And how do you help them course correct?
So time is the biggest deal with a 1031 exchange, right? We all know that. We all are aware of that. But so many 1031 exchange buyers get caught up in that time and they're afraid to, I think, make a move. And we can write an offer on a property and see what happens, and you're not stuck buying that property. we can play that avenue a little bit. We can test out the market. So I am always encouraging people to start your search ASAP. It might be too early, but if you know that you are selling something and you want to do an exchange, let's start seeing what's out on the market. So you're at least aware of where pricing and cap rates are, how quick properties are going, and what it is that you think that you want. So we might not be buying that property that's available for the first 3 months while you are trying to sell your down leg, but let's start understanding the market, because if you're not doing transactions every day, you're not aware of where the market's at. And so if it's been 5 years, you might have a different idea of what you think your return is going to be on your up-like purchase. Trying to be a little bit flexible too, right? So you've got the opportunity to identify 3 properties. Let's try to identify 3 properties. Don't get stuck on one. We don't want to go into our due diligence and that is the only one that you're committed to and find out that something's really wrong. And now you're stuck buying that property or paying the capital gains. So really a little bit of flexibility, getting started ahead of time and being open to ideas. And then working with a really good exchange accommodator too. It can make or break a deal. It could have minimal variance sometimes if everything's lined up and it's super smooth sailing. But if you end up with a complicated situation, that exchange accommodator can really help pull that across the finish line. Does that answer the question?
It's a great advice. That's a really good way to break it down. I haven't heard that advice before.
And Rae, are you seeing appetite for buyers change? Like, what are you seeing more that they're focused on? Is it more rate of return? Is it risk? Is it leverage? Kind of where are you seeing buyers right now?
I work with a lot of older 1031 exchange buyers, and so they're definitely looking at risk. And they don't necessarily want to do another exchange in 3 or 4 years. So they're trying to set something up for, hey, this is maybe the last exchange I'm ever doing, and my kids are going to inherit something, or they're going to figure it out. So I helped a buyer with a Dollar General investment beginning of this year. She exchanged out a multifamily, and Dollar General was the perfect investment for her. 15-year lease, 14 years left, 5% escalations every 5 years, absolute net. So she is not responsible for anything. They pay the taxes direct. They pay the insurance direct. She's retired. She was like, do I put this in, pull it out and go buy bonds with it? Or do I go buy commercial investment property? That's what we were looking at. And so for her, that was the ideal move. And she's like, I hope, her words, not mine, but she's like, hopefully I'm dead by the time I have to deal with this. And that's my son's problems.
That's what we're thinking. Are there any markets outside of Portland that your buyers are increasingly attracted to?
Yeah, I mean, anything outside of Portland.
That's it, right? Yeah.
Portland is a hard sell right now. And I will tell you, if you're interested in Portland, there is a lot of meat on that bone. We can get some really good, great cap rates. And I'm a big fan of Portland. I think that Portland has had a rough few years, but it is coming back. And I think we're going to see some glory days ahead of us. I don't know if that's in 5 years or 15 years, but if you are young enough to get in and play and be a little bit flexible for a few years, I think there's a lot of opportunity in Portland. Unfortunately, that's not a lot of investors. So
yeah, like it's mostly older.
Yeah, they're like, absolutely not Multnomah County and absolutely not Portland. Get me the hell out of there. I've done 2 transactions in Prineville in the last year. If you know where Prineville is, it's in Central Oregon. And I think that is a really interesting part of our state that is receiving good attention and still has a lot of meat on the bone. I was having this conversation with somebody the other day where Central Oregon has really struggled for decades. You look back to any sort of boom or bust, and it has some of the biggest sways that our state ever saw. And a lot of that really goes down to the infrastructure and being able to get goods in and out of Central Oregon. It's very winter. It's a lot of 2-lane highways. And so exporting goods from Central Oregon, besides beer and Deschutes, was not really an option. And so the economy was greatly impacted. But now that we are in a more digital age where people can work remotely, you've seen a lot of people move to Central Oregon where there's this outdoor work-life balance and actually be able to stay and keep their job. You also have data centers. Prineville is huge on data centers. Meta's out there, Google's out there, and they have solar, right? 300 days of sunshine a year, which you need for data centers. So you're seeing this much more stable economy that is building the foundation of Central Oregon. And I think that's really going to help move it into its next sort of glory days where it can maybe be more sustainable. If you're talking Bend, I don't know, you're still paying crazy prices. But Prineville is a great opportunity where more affordable housing, or like Redmond is really interesting. They don't get as much snow in Redmond or Prineville. They're actually a lower elevation compared to Bend. So you have to pay less in snow removal. And that's where a lot of the workers are moving, middle income housing. And there's, I think, 2,000 apartments are being built in Prineville right now.
Oh, wow.
Yeah. And that one's really interesting too, because you've got all these data centers that came in and agreed to pay really hefty taxes. And now those taxes are going into the infrastructure of streets and sidewalks and schools. There's a pretty recent hospital that's built there, and not a lot of commercial space and retail. So make some great opportunities.
Wow, that's great. What are some under-marketed properties or deals that you think investors should pay attention to?
Kind of like your scummy little retail centers don't have national tenants, and they were built in the 70s and they could use a facelift. But what they do have is tenants who that is their livelihood, right? If you're a salon owner on the coast and you've got your space, you're showing up every day because that's how you pay your mortgage. That's how you feed your kids. So no, you don't have national credit tenants behind you, but I would argue that you are much more solid tenant than a Chipotle who could close you down because they don't like the numbers for that store. But that really goes into what those tenants are and how dependent the economy is on their uses, right? So a floral backyard art store is not going to do as well as a hair salon where people go get their hair cut every day. Or like smoke shops. People are resistant to buy something with a smoke shop because the insurance will go up. But in a retail situation, your tenants are reimbursing that anyways. And they keep like traffic, like regular. And if you go to that smoke shop, then maybe you go to the liquor store next door, or maybe you go there because you got your hair cut and it's convenient and you do everything else. And the lower end, tied to that too, I would say lower end food. So like grocery outlets, I think are really interesting right now. We are in a situation where our economy is being drastically impacted by the cost of living and food. And those are becoming much more attractive for people to shop at and then support anything else that's within great proximity. The biggest thing with those is knowing when the leases roll over. Funny, and something that I don't see that often, but you see in new development, especially stuff that was developed like, let's say 2005 to 2010, the developer will come in, they have all new leases in a retail center, and everybody's on a 5 or a 10-year lease. And so they all expire in the same year. And like, it's your worst nightmare if you're buying a retail center. You've got, 5 tenants that are going to roll over this year. You don't see that in the older centers. You see that staggered where it's one every year because they've got a 3-year renewal and a 7-year renewal and 5-year renewal. And that's really important. And that's something that the bank's going to look at too. If you're doing a DCF on a rent roll for a shopping center like that, you're going to look at what is the chance of renewal. And if you are applying you even say 80% chance of renewal, but to every single tenant in your center in 1 year, that's going to drastically impact your cash flow and the bank's ability to underwrite.
Yep, that makes total sense. And that's already tough for the banks to hit their cash flow numbers and to, have a property cash flow sufficient so that they do want to loan money. So, yeah. So how do you find those deals from your broker's perspective? Just start calling on retail strip center owners and just starting the conversation, kind of what I do with the multifamily owners, and just start building that relationship?
Yeah. Looking at retail centers, I call on a lot of my old appraisal clients too, like centers that I liked, that I remember thinking they were really great investments. And then seeing anything that hits the market too. I love to, probably not a popular approach by brokers, but I love finding a listing that I just think is a great investment and then going and trying to find a buyer and somebody else's listing. But I've done that a few times where I just see something pop up and I think, oh, that is such a great property. I really want to represent the buyer on that one.
And Rene, you would say you do that as well, like a little bit in your area?
What I do is I'm continually talking to multifamily owners because a lot of them get frustrated with what's happening with rent control. And they always think, well, at least I know the bones of what I own. And so until they have kind of either hit a frustration level where they're like, I'm out, I just want out of multifamily. And Rae and I deal with a lot of people that just can't take it anymore because of the government control and everything's so slanted in Oregon towards tenant friendly. And believe me, I have tenants myself. I've got a lot of friends that are tenants. Everybody needs a place to sleep. But when you're a landlord, it can be super, super tough. And so I start talking sometimes years in advance to owners, trying to advise them at what's a good time to look at making a transition and doing a 1031 into a different type of asset.
And you sometimes represent the buyer, or you have in the past?
Definitely. Because there's times where a buyer will come to me and say, hey, I'm going to have a 1031 exchange. I want to buy multifamily in the U of O area. And I just happen to know of some properties that probably the owner would be ready to sell. And so we put off-market deals together. One of the benefits there, if I'm representing the buyer, is now you're not competing where the price is being driven up against you. We're negotiating with the seller, trying to put together a fair deal. And I'm sure Rae does that, especially on retail. I think a lot of transactions happen off market where you just know the buyer or the seller, and then you put a deal together and start that conversation. At the end of the day, really, you got to solve the seller's problem. If they sell, what are they going to do with that sack of cash that you're going to pass to them at the closing table?
Yeah. And I keep a list of just potentially for sale properties too, which I'm sure Rene does, right? Where I talked to a developer yesterday, called him about something that is for sale. And he's like, well, I also own this one and this one. And, everything's for sale. Let me know. Like, okay, this is a very interesting conversation. And those other properties are far more interesting than the one that I was calling you about. So it got my brain really working and thinking to the highest and best use of his scenario and what he should do.
Yeah, that makes total sense. So before in the episode, you were saying that you have areas where you go and you look for things that might be incorrect, or you just look for how did you say it's like misrepresented properties, or what do you call them?
Mismarketed.
Mismarketed. Yeah, they're not misrepresented, but mismarketed properties. So how do you identify, what are some tools that you use to, without giving away your secret sauce, how do you identify some of those invisible upsides for buyers?
I just go through, I think, a lot of my appraisal background. I know a lot of properties. I used to do 75 appraisals a year. So if you think about really digging into 75 properties, they're nuts and bolts every year for 9 years. And then on the appraisal side, you also are digging into every single comp that you're using if you are really doing your research, right? So you're trying to find at least 6 lease comps and at least 6 sale comps for every single one and understanding the inner workings of those properties. I kind of have a mental Rolodex of a lot of especially the older properties or locations that I used to go to. And so I love just scrolling through CoStar and seeing what's new and seeing what's there and thinking, oh, I appraised that one. I know the inner workings of that one. That's a really interesting property. And I remember thinking, wow, this is a great investment, or this is a terrible investment, but look at what they did when they bought it. They've repositioned this. This is a unique opportunity. I probably spend way more time than I should just diving into OMs and looking at different things and asking brokers and annoying them for updated rent rolls and T12s. But it's my brain. I can't turn that part off.
I was just going to say, I think it's your brain and how you process information, because we both know that listing brokers' job is to put the highest value out there to get the highest value for your seller. And our job as buyer's agents is to do our own due diligence and our own underwriting, so that when we turn to a buyer and say, hey, I think this is a good investment, you're really confident in your knowledge in the market and you've done your own underwriting. Because brokers, I wouldn't say they do things to deceive, but they'll go light on expenses, as you've seen. And so that's one reason that getting a T12 is important. So for the audience, that is where you're basically getting the income and the expenses for the last 12 months. The T stands for trailing. So we're going back 12 months to look at how is that property operated in the last year, not just for 2024, because like student housing is an example that typically turns in the summer months, and in the winter months, you might have kids start breaking leases after that first fall term. And so seeing cash flow and income over a trailing 12 is super helpful. From your perspective, Rae, when you're looking at a T12, what's some things that jump out at you that you're really looking for?
Does the income that they're bringing in remotely reflect the rent roll that they've presented, for one? That's always shocking to me how those are different.
Number one.
And then, you're trying to factor in vacancy and credit loss a little bit. So I always try to put it into some sort of NOI. And the expenses, is there taxes and insurance? They're usually not on a T12 because they're paid directly through a mortgage. So every now and again, you'll get somebody that takes a T12 and they say, here's NOI, and they cap it and kick it. That's like 100 basis points difference. And then a T12 is not going to have reserves, and it may or may not, probably doesn't have management, depending on if it's from a management company. So there's a lot of expenses that are in there hidden. And then a good opportunity that could be there is they may have included capital expenditures as an above the line expense in the T12. So they redid the roof, or maybe they redid some HVAC and they did some really big TI build out, and their accountant put that as an above the line expense. And maybe the broker is representing that as an expense. So the expenses are showing higher than what they actually are. That could be a really good opportunity to say, wait a minute, this is just an accounting error. And instead of being a 6 something cap, this is probably operating closer to 7 cap. So I love to tear those all apart and see where there's at. And rent increases, from an appraiser perspective, from a banking perspective, you should be applying any rent increase that's coming up in the next 6 months. Because if you're buying that's in your upcoming year that you would be underwriting your first year of NOI on. So then sometimes brokers don't do that, and that's fine, but there's more meat on that bone, because by the time you close, or within 2 months after you close, that rent increase 3%, or maybe it was a 10% every 5-year rental increase. So really digging into an underwriting what those are.
Since the newest bill came out, do you have anything that is going to affect the market when it comes to this 100% like depreciation law that came into place? How is that going to affect your business?
The big, beautiful bill.
The big, beautiful bill.
I think it's going to be great for generating. We needed some sort of kickstart, and it definitely feels like it's already starting to kickstart the fact that people can have more 100% depreciation. OZ zones are also part of that. They're being brought back indefinitely. And I'm still trying to completely understand OZ zones, but there is a lot of opportunity in OZ zones, particularly in the state of Oregon, that qualify for a lot of those OZ zones.
Wow.
So I think it's something that's going to help people get a little bit more comfortable with the fact that there's still a lot of stuff that they're uncomfortable with. And that would be our interest rates. Interest rates really aren't that high. People don't like to hear that because they're higher than they have been historically for the last decade, but we're never going to see those low interest rates again in our lifetime. And so get over it. This is very good and historic, and let's just go buy something.
Move on.
Can I make that into a bumper sticker? Get over it. Gosh, I hear that all the time, Rae. Gosh, money is so expensive. And it's like, get over it. I'm going to use that tagline.
And if you are, if your decision to buy an investment property is hanging on 50 basis points of an interest rate, you should not be buying that investment.
Amen. That's right.
Period.
You were too new of an investor or not well capitalized, not well heeled, and you should sit on the sideline and save some more cash. That is right.
Yeah. So
absolutely.
Decide, lower your price point. I do see, I work with a lot of first-time investors who are people that are exchanging out of residential investments into their first commercial opportunity.
Yep. And
the number one conversation is, how much are you putting down? Because they all think, well, I only need to put down 20% because that's all I had to have with my house. No, in commercial, you need at least 35. Let's try to get closer to that, like 45%. And then they want to bite off as much as they possibly can. And they are super sensitive to interest rates, and they don't quite understand, like, you're just barely breaking even here by the time you pay your mortgage. Let's take a step back. That's the beauty of a 1031 exchange. You can invest in something now. We can get it up and running. You can get some appreciation. You can understand a little bit more about how commercial works compared to the duplex that we're exchanging out of. Yeah. And then in 3 years, let's go do it again. Let's go buy something better. Let's see how that worked out, what you liked, what you didn't like.
So interesting that you say that, because I think a lot of times I hear people say 1031 as an exit strategy, but you're almost saying it as like residential, then to 1031, then into something better in commercial. Is that right?
Yeah. Just keep building that snowball, right? Let's keep making it bigger and better and a bigger base. And pretty soon you'll have a whole snowman.
Rae, what's one thing that you hope to see the commercial real estate industry change in the next couple of years, or what changes are you hoping for or excited about?
Rene, you know, I'm a pretty straight shooter, and I do as I say and say what I mean. And I love working with brokers that also sort of operate on that mentality. So I always appreciate that and feel like we have changed from, I need to hold all of my negotiation and strategy back and only relinquish that when I want to, because that's a strength, to let's have a conversation and be stronger together as brokers representing opposite sides to make a deal happen that everybody is comfortable with, that really is a good deal. I think there's a lot of room to be able to negotiate and be open and honest. And I would love to see that exhibited more in our environment. And I think women too can do that way. So as more women brokers come into the environment, I think you get a little bit more of that.
Mm-hmm. I would agree with that.
Yeah. Feels like we're in the era of transparency.
Yeah. There's this thing like being hit over the head with a surprise at the end of a transaction. So
the transparency is critical for us to be able to cross the finish line with a deal. The more you can share and tell us what your pain point is for your buyer or your seller, then we have the opportunity, when we're the brokers on the other side, to either overcome it, address it, or clarify it, explain it. I mean, yeah. Rae and I don't really want to talk about it right now, but we had a deal that failed, and really we struggled with the broker on the other side because of lack of communication of what the problem was. And we got down to literally the last day or two of due diligence. And Rae and I felt like we could have resolved a lot of this earlier in the transaction had they been more transparent about what the concern was. So we're pretty big proponents of that.
And I don't think that limits your ability to negotiate at all. In fact, I would say it's the opposite. I think that knowing who I'm working with on the other side, where they're coming at, and understanding, hey, this is what's important to us. This is what we have to have, or this is why we're putting this foot forward, only helps me go back to my side and relay with confidence that this is the best deal, or this is where we have to be, or here's where I think we can negotiate. It's just a different way to do the dance.
Thank you so much for being on the show, Rae. We really appreciate you coming on. It was so insightful.
Yeah, thank you so much. It was fun. An hour flew right
by. Every morning now when I'm up looking at LoopNet and Crexy and all the different websites looking at properties, I'll be like, oh, it's 7 a.m. Rae's doing the same thing. We're all combing the market.
Yes.
Well, we'll make sure and drop your contact in the show notes. If you have a commercial real estate need, you need to lease something, you want a broker opinion of value, you need to sell a property, Rae is your person. I really like to stay focused in Lane County and the Eugene Springfield market because that is my home base. I'm very knowledgeable on the market. Once it gets into Portland, yeah, I can dig through CoStar and get the information, but you really owe it to yourself to talk to an expert like Rae. So we'll put your contact in the show notes. And thanks again for being here.
Thank you. It's an absolute pleasure.